Hello and welcome to FX Street Currency in Play. I'm Matt Brown. I'm joined today by Eddie Tofpik, who is head of FX at ADM. How are you today, Eddie?
Pretty good, pretty good.
Good stuff. Well, since last week, the pound has ripped. Let's have a look at the headlines. Well, straight away, cable yield differential favours sterling. All eyes on the Fed.
The Fed, yes, that's going to be the one that we're going to be looking for to see whether their tapering will finally start tapering properly, and they'll reduce their get out of that complete scenario we've had of the low interest rates and move into what they call a normalised interest rate environment. Wait and see on that one.
Indeed. And again, US dollar looking for direction below 92. Again, we're waiting on the Fed. And maybe linked to that as well, gold drops to over 2-week lows below the 13.15 level.
Risk off.
Risk off again. No missile firing from North Korea over the weekend.
A lot of talk.
A lot of talk, yeah.
But we don't pay much attention to talk these days, unfortunately. And even the missile firing over the top of Japan, the northernmost island, we don't necessarily pay that much attention to, which is a bit sort of ironic in many ways.
So look, I think Donald Trump is addressing his first address to the UN, I believe. Later
the whole General Assembly, it's the annual General Assembly meeting. So there's a lot of politicians be heading towards New York, and there's going to be a lot of deal making going on in the background there. I'm sure they'll be speaking not just as a public face, but also there'll be the private discussions between the various heads of state.
Understood. And looking at a few charts you pulled on today, euro dollar still within that trend, the pitchfork.
It's still, I mean, it's still there. It's still working with it. It's towards the lower end of it. But you can see last week on the Wednesday, it dropped down and bounced straight back up again. It's steady at the moment. It's not really going that much higher. But we had a new high the week before last. The last week's low was still above the previous week's low. So we're still gradually moving up, though it's obviously slowed down a little bit at the moment.
Good stuff. Moving on, looking at euro sterling now. Here's an interesting chart.
I warned you, 21st century high, 94.12. The closer you get to it, the more compressed will be the resistance. And it managed to get up to a resistance which is around about 93 even, but actually tipped over to about 93.07. It had then a bearish doji, and 2 weeks later had a key reversal down. Higher high, lower low, and below two previous closes. That was on the Thursday of the week before last.
Yes.
And then last week was the result of that, the big move down that we saw on the back of that. Now, what's interesting is the market's gone from being bullish to neutral. We are below the medium moving average, but above the long moving average. One of them has turned down, one's turned sideways, and the other two are still going upwards. They're sort of lagging indicators. So we're actually, the market at this particular point, I'd say, is more neutral. We're below some fibs, but there's still support underneath the market. So I'd say at this particular point, we've moved from overtly bullish through mildly bullish to neutral.
And do we expect it to consolidate around here to find a new level and decide where to go, this neutral kind of no man's land?
We've got some support areas, which is underneath the market is the long moving average is 87.06. So the 87 area is support. Then above the market, you've got the resistance, which is the medium moving average, and that's trading around about 88.60 at the moment. So those two levels are where the support and resistance is. If you're going to consolidate, it'll be between those. But there's room on the downside, and there's room for a little bit of movement on the upside as well. So there'll be if there's a trading consolidation, it'll be a trading range rather than a specific one. At the moment, the trend is still to try lower. Last Wednesday, we had a big key reversal down as well, mid-move. So there is impetus to push it further lower. But I'd watch out for that, the move down below. We've had the first close below the October 2016, December 2016 move, the 50% move of that. That's quite significant. That's the first close. We haven't had one further than that. That's at 88.34. If you have another one, there'll be a further bearish signals, and that'll mean an attack then at that long moving average at 87.05, 87 even area.
Understood. Moving on. Again, looking at sterling, but first is the dollar. Cable onwards and upwards, broke through that resistance.
Yeah, we had a nice channel line which had been working since May, June actually, really. And we broke through the upside resistance. As I said to you, there was fairly free movement up to around about the 136.50 area. We managed to 136.17, and we've halted there at the moment. There isn't that much beyond that till you get to 140. 110, 140.09. And the doubling up of that channel, that's just underneath 139. So if you believe that this is actually going to go higher, this is the start of a real move higher, and we've only had really one close. I'm not counting last Thursday's close, which just over the channel line. So if you have had one close, which was last Friday's, if you have another one, there's an opportunity to go up to about just underneath 139 even, so 138.70, 138.90. That would be a doubling up of this channel line. That would be the first reasonable target area if you're looking on the upside. If you're looking on the downside, well, you've got support at 134, which is the channel. So at the moment, we're caught between a no man's land. It's not really moving in any direction, but there's plenty of movement and plenty of opportunity in either way.
Understood. One to look out for. Yeah. And, well, it wouldn't be your Monday morning show without talking about our old favourite, Bitcoin. Torrid week for Bitcoin last week.
Well, this is a messy chart to start off with.
Yep.
I mean, the main thing is the Chinese have sort of apparently, allegedly, whatever, said that they're no longer going to tolerate Bitcoin miners in China. Now, the Chinese, the Japanese, the Koreans make up the big portion of the Bitcoin mining industry and of trading in Bitcoin as well, to a certain degree. So we had a big pullback. But the pullback is not even down to neutral. Neutral would be something like about 25, 30.
Right.
And the big move down only managed to get down to the high of June 2017, which was around about the 29, 30, 50 area, just underneath 33,000 area. So we only came down to that, and then we immediately moved up. So there was a lot of support. There's a lot of support underneath the market, taking opportunity of this drop down to accumulate in that particular sense. You'd need to get below 25, 30 for it to be neutral and 2 consecutive closes. You need to go bearish. It'd need to go down to 16.95.
Incredible.
So it's a pullback overdue. You know, this is what Jamie Dimon says. This may be a bubble, but it's an interesting one because it trades so well. And if you look at it as a chart, that's what you want to see, something like that. So we've had a big pullback today. Thursday and Friday last week were indecisive actions, indecisive doji crosses, effectively. It's literally where the market opens and closes at the same level there. So you have that. Well, it doesn't know whether it's going to go up or down. Then you have another day. It doesn't know whether it's going up and down, but there's a long up and above. So it stopped the move down temporarily, if nothing more, and now we had a movement back up again.
So we'll see where we are next week on the back of that. Looking today, though, I should say, anything jump out? I think Bank of England, Carney speech.
It's late in the day, though.
Yes.
You know, it's late in the day for London. There's nothing really that's coming out and smacking me in the face with it, so to speak.
And looking ahead to this week, obviously, the Fed, German elections as well. That's
now sort of on the horizon as well. We've also got some other details coming in of that election to see how that's going to be going ahead. But the politics that I'm no expert on, but it's obviously sitting there waiting for us. It's literally a date, and you're going to look to go towards and see what happens. But the euro at the moment, it's benefiting at the moment for a stronger euro and a weaker dollar overall. I don't necessarily see at this particular point what's there to help the dollar at this point, unless we see Janet Yellen raising the interest rates in the US and having a good, clean action on normalising the balance sheet, of buying back of the various things that they've sold at various points to get money, or the other way around. Whichever way it is, it's to try and normalise their balance sheet. That's what we're going to be looking to see.
Understood. Well, we'll wait for that in the middle of the week. But in the meantime, Eddie, thank you so much for joining us today.
Thank you.